Peppers. And this is my fourth time I'm chatting with him on YouTube. My first time was actually 2014, and that's a great interview. I'll link it to the video description. And then we interviewed Emmett a couple months ago and also this past weekend. I wanted to chat with Emmett because he put on a big trade, a big bet recently on the S&P 500 inclusion, betting on long, I guess, way out of the money, short-term calls expiring January 2021. And I wanted to just get an update on, Emmett situation, how he's feeling, how he's doing, if his strategy has changed, and just kind of dive into his mind. But I first want to just say that this is not investing advice at all. We don't know anyone's situation. Please don't listen to us, and base your moves based off of that. And we're going to repeat that again at the end. But this is just our personal experience, our personal thoughts, and it has nothing to do with any other people right now. So, Emmett, how's it going?
Good, good, good. I mean, the stock's gone in my favor a lot faster than I anticipated. So it's pretty good mood the last few days, I guess. Yeah, yeah. It
Yeah.
feels kind of like I was telling my wife. It feels kind of like when your team's in the Super Bowl and you put a little money on it or something, and you're rooting for that team, and you have a lot of excitement for that 3 hours. But this is going to be like maybe a month long of excitement. So it's it's kind of exciting. Yeah, it's fun.
Yeah. I mean, on Sunday night when we talked, or Saturday night, whenever it was, the stock was at like 490, right? And so you had gotten your options at 455-ish or so when the stock was down, and the option calls were about $7 each. And the past 2 days, the stock's been on a roar. And I
Yeah,
think today it closed at $555, after hours like 562.
yeah,
Yeah, it's insane. So
yeah.
when you're watching this, like, what's going through your head?
I'm thinking, this is running up faster than I anticipated, and it makes me nervous a little because I feel like there's a better chance that either this move up is going to be much bigger than I even thought, which would be great, or that there's a ton of speculation driving the price up. And if I don't time it right, I could lose everything if it tanks from, 700 down to like 600, the third week of December or something, and doesn't come back up. So I could see that happening too. So I have to, as it rises really fast, I'm kind of thinking about my plan to maybe, I think I mentioned in the past, like um, sometimes I sell, a portion of my position just to make a little bit of money and then let the rest ride kind of thing. That's kind of one strategy I'm thinking of here if it keeps running up faster than I thought. Um, and I was looking at interestingly, I think they closed at 24 or $25 a contract today, the 700 calls that I had bought. Um, so it's up like three times already. But I was looking, like you said, it closed around 555, 560, got up to, and I was looking at the option contracts for at the money, the 560 strike contracts, right, for January 15th. And those trade at around 65 or $70 a contract when it's at 560. So if the stock runs up to $700 in the next few days, then I could just sell out a lot of it for a 10x return, because I'm thinking that this option contract could easily get to 65 or $70 a contract too, if it's in the next like few days or a week or so, which at this pace could easily happen.
Hmm. Um, so what do you think's going on? Do you think it's because I was like thinking about it today. I was like, are funds buying right now? I guess there might be some, but most funds, I don't think they would probably be motivated to buy necessarily early, because aren't they just indexed to the S&P 500? They're not trying to necessarily beat the S&P 500, right? So
Hmm.
I don't know what's the motivation to necessarily buy so early, but I don't know. What's your take?
Yeah. Yeah. I mean, it could be a lot of speculators, but also I think more likely it's the benchmarked funds that are just trying to get ahead of the trade and just trying to get their 1% weighting, or it's probably going to be 1.5% weighting by the time this runs up a little more, maybe higher by that time. So they're just trying to I think it's the benchmarked funds, some of the early movers that are trying to get ahead and get a good price on their weighting in time for December 21st, because maybe they're anticipating there's a lot of risk if they wait themselves. And the index funds still have to buy. I don't think the index funds can buy until December. And I'm very curious what the S&P is going to come out with. I think November 30th with their what they recommend, or what they've been advised to do on the two part rebalancing, right? They were going to do like 50-50 or 25-75 or something. So I'm very curious to see what they come out with on November 30th with that.
Mm-hmm. Yeah. I remember I replied to one of your tweets. I'm like, why don't you, sell a third or so, right, after 3Xs, and then let the rest of the 2/3 ride, with your bet, so you can at least take your cost basis out. So what are your thoughts? Is it probably, I'm guessing you're probably thinking maybe it's too early. That's my guess right now. It just started, right? Yeah. So
it just started too early. I feel like the fireworks haven't even started yet, to be honest. Like, but they have in a way. But I feel like really it hasn't, because it's still just a few days in, and I think there's a lot of buying left to be done. Like, this is unlike any other catalyst. Like, I keep reminding myself, like, people talk about catalysts, like, what's the next catalyst for Tesla? Is it the Q3 numbers, or the profit margin, or the new product, the battery day? Is that a catalyst for the stock price? It's a catalyst for the company, but the actual share price is not necessarily a catalyst, right? What's a catalyst is this, marching order from the S&P committee that these 5 trillion of index funds, they have to buy 1.2% or more now of Tesla in their portfolios. I mean, that's a huge, like 120 million shares. They have to buy that. They have no questions. They have to do it. That's a catalyst in my mind. And so I just don't think that's been accounted for very well in speculators even yet. So I think it could run up a lot more still, and I want to keep a large portion on the table for that potential possibility.
Mm-hmm. Yeah, got it. Yeah, it's interesting. I guess will you reevaluate? I guess every day you're reevaluating in a sense, right? Getting more information.
Yeah, absolutely. I mean, there's a lot of great people on Twitter, that I think a lot of us follow. There's like a guy has been communicating, Frank Pelton, or the guy Gary Black. He puts information out there, another Tesla Facts or something. There's all these great people on Twitter that put all this great information together about the S&P 500 inclusion and stats, and you just kind of gather more data from all points of view to try to figure out what the best decision is going forward. I mean, what do you think? Do you think the stock's going to keep running up, Dave? I mean, you're a little more conservative than me, so I'm curious. What's your
I mean, so what I did was I wrote out a grid, and so the evening of the S&P 500 inclusion, after they announced it, I'm like, okay, so what are the chances? How am I viewing this probability wise? So I said, okay, the chances that the stock ends up between $400 to $500, let's say by December 21st or so, versus 500 to 600, and then versus like 600 and up. And so I said, okay, those are maybe 3 major scenarios. And I jotted down my scenarios, and I tend to be a little conservative on those. And so I said, okay, let's change it, and let's have another column for bull case. For if I was more enthusiastic, how much could I give with those percentages? And I think in both of my scenarios, I figured there'd be like 50% chance that, or higher, that S&P 500 would be above 550. In my bull case, it was like 50% chance it would be about 600 actually, by December 21st. So I was quite bullish. For me, the only,
you didn't think it would be November 21st. You didn't think it would be
exactly.
Yeah, it was December 21st.
December 21st. That's one thing, but the other thing was, it's like the jump from, I say, because the stock was at like 400 or so, before the S&P 500 inclusion. So for it to jump 50% up to 600, that's actually a big jump. But then to go from 400 to like 700 or 800, that's like double of a company that's already 10x. So for me, the probabilities go down significantly after 650, 700. It just, the greatest probabilities in my opinion was like from the 550 up and 600 up. I could see that being like very realistic. But yeah, I think definitely, your
Are
probabilities
you
are
updating
higher.
are you updating your probability table today or every day, or are you
I'm
gonna
actually
you sticking
keeping
with it?
it. I'm actually keeping it
Okay.
because I don't want to get kind of caught up in the hype of like, oh,
Yeah.
because the stock price is up, I'm going to up my probabilities. I kind of want to stick with the probabilities that I kept, from the beginning
Sure.
personally. Yeah.
Yeah, yeah. It's fair. Yeah.
Yeah.
Okay. What if the stock gets to like $700 in 2 weeks? Like then you'd probably have to reset your probability table from that point forward, right?
Well, yeah, I mean, it's like tearing it apart.
Yeah.
um,
Yeah, yeah. Well, I mean, you should just update. I mean, what's interesting is the firm I used to work at, or they work, Interactive Brokers, they have this cool tool called the Probability Lab. And so you can actually do what you're saying and like put your probabilities that you think and put it on this like chart, and then it tells you what the options are pricing in as the probabilities, and then you can kind of see like where your difference is, and then it can even suggest trades for you and stuff. Like, it's interesting. It's unique to Interactive Brokers, but it got me when I first came out with that tool. I think it got me thinking differently about options,
yeah. Have
just
have
in
you heard of the
probabilities.
have you heard of the Kelly criterion?
No, no,
Okay,
what's the
yeah,
Kelly
it's
here?
a fascinating kind of calculation and formula that it's a betting formula basically, right? And if you basically assess certain probabilities that you see of a situation, it'll basically tell you what percent of your kind of money to put into that bet to maximize, right, both the potential and minimize the risk. But yeah, it's pretty fascinating. Some people actually invest off of that stuff, like actually put in probabilities. I think it's a
Mm,
little bit complex, but I think the point of it though is if there comes kind of a major opportunity that you have a super high conviction in,
hmm
then the Kelly criterion actually shows that you should put in something into the bet, especially
mm,
if you think it's going to be a huge outcome, let's say a 5x or 10x in whatever period of time. Um, and it just makes mathematical sense, if you
hmm
if you're
hmm
if you're thinking like, and you could be wrong, of course, your probability, so you could obviously lose everything because you misjudged the probabilities in some senses. But let's say you thought you had a 60% chance of it going up to 700 or something, the stock price, and it was going to be a 10x or something in your investment, then the Kelly criterion would basically, the mathematical formula would actually show you that you should actually put in a certain percent into that bet because the rewards are so high, that the
Okay,
outcome will justify, even though you'll
sure.
lose some bets along the way. When you win the bet,
hmm
right, you win a much greater amount.
Oh, so
Yeah,
sort of like what I'm doing,
yeah,
but it's
exactly.
someone kind of created an actual formal process for
Yeah,
formula.
yeah, yeah. Check out some YouTube videos on Kelly Criterion. There's some good ones out
Okay.
there, and yeah, it's actually, you're probably doing it more intuitively. You kind of
Yeah.
intuitively know that if you have super high conviction on a super high reward bet, and you might lose some, but if you lose some just with a certain smaller percentage, then you'll still be alive, to bet again. And
Yeah.
once you bet, you make the 10x or 20x or 50x or whatever, that will outweigh your losses probably.
Yeah. Absolutely.
Yeah.
Yeah.
I'm curious. There's some people who are asking, like, if Tesla kind of jumps super high, 800. See, I'm kind of hesitant to even think about like Tesla going into 900. Most of the time, it doesn't happen. That's the thing, and people get all emotional and all that stuff,
Yeah.
hoping it'll happen, and it's like wishful thinking, right? But nevertheless, if it does jump super high, what's your take on kind of like selling puts or selling out, or
Mm.
kind of reversing your position? Because do you see I guess someone was saying, do you think Tesla, if it went super high, would the S&P 500 inclusion event be a possible sell on the news event, right,
Yeah.
that you could play the
Yeah.
other side? What's your thoughts?
I mean, I think there is some sell in the news, just from speculators who are jumping in, getting ready to sell their shares to the S&P index funds. But that's 120 million shares. I mean, that's a lot of shares for speculators to be buying up to sell back. So I think in other index inclusion events, that's probably happens a lot where you have the niche, strategies where they dedicate a certain amount of capital to doing exactly that. But to have 60 or 70 billion worth of cash sitting around collectively, I don't think that's as realistic for Tesla versus some of the other events that are probably much, a tenth of the size, if even that. I don't know. Facebook was pretty big, but I don't recall how big it was. But I also think that, you know, the S&P funds that buy Tesla stock, they're not selling it, right? So it's sort of like a buffer. So it might get to a certain price and kind of stick there for a while. I'm not sure it'll be like a violent down move. It could be, but I'm hoping because it's not just some normal catalyst where it's, pure speculation. This is a little different, as I mentioned earlier, where they actually have to buy. They basically have to take 120 million shares out of circulation, plus the benchmarked funds. And a lot of those benchmarked funds never even touched Tesla before because it was too speculative, too crazy of a business model for them to have an opinion on, right? Mm-hmm. So now they have to have an opinion on it, and they either have to buy it or decide actively not to include it in their portfolio, which includes probably 499 other S&P 500 stocks. So I think it's just a huge tsunami of buying, taking shares out of circulation, and it could just go up a lot, but maybe it's priced in at this point even, and it just kind of goes back and forth between. I wouldn't be surprised if it just sticks between like 500 and 600. That could happen too.
Mm-hmm.
So it's risky, and also like we talked about in the last one, a lot of it depends on the macro markets. Like the markets are doing. The growth stocks in general have been doing very well. And, what if interest rates, someone thinks they're going to go up and then everyone gets out of growth and goes back to value stocks, and so there's a lot of risk. Anyway, I'm not sure if that answered the question.
Yeah.
but it could pull back violently, or it could kind of stay stable at wherever it goes, 800, 900 or 1,000 or 600,
Yeah. One of the reasons why I'm comfortable kind of chatting with you regarding options and all this stuff and betting is, first off, I've known you for quite a long time, and I've seen kind of the whole ups and downs over the years and gotten to know you. Mm-hmm. But I also have seen a lot of mistakes or a lot of losses that you've incurred because of I wouldn't say miscalculated, but there's no way you can accurately know the future, especially short-term future, and
that's right.
And there are, over the years I've seen, you hit it out of the ballpark sometimes with big moves, but I've also seen you kind of, lose a decent amount, right?
Sure.
And it's not so much that you have per se amazing abilities to accurately predict the future. I don't think that's I think some people might be watching oh, what is Emmet going to do next? I'm going to just follow whatever. Yeah. And I think that's going to just kill people in terms of their portfolio or bets, because the thing that I think you have isn't necessarily you're super accurate in predicting the future, but there comes along these, what I call super moves. And it feels like, it seems like that's where you've made the most in your mm-hmm. kind of history of investing and trading, is these crazy super moves that mm-hmm. just totally just go beyond, explanation in a way. And those gains have outshadowed all your other losses, mm-hmm. I don't know, when I look at your other bets, just the mm-hmm. non-super move bets, I don't think you're that great of a trader per se, or better. I think you could just be very just average or very mediocre.
I'm average
or maybe, something. Yeah. It wouldn't be fantastic returns. I think people might be shocked to be what is this, but it's these few super moves, that jumped, let's say, your initial portfolio from tens of thousands to, let's say, a few million, right, several years ago, back in 2012 to 13. And then this past year, kind of the super move is, and most of your move was most of your portfolio was in Tesla, leaps, right? That's what I'm thinking.
Yeah, mostly Tesla leaps and shares, a combination. I always wanted to have this core shares I wouldn't touch in my personal account, but I speculated as much as possible, and everything else was deep in the money, long-term leaps for years.
Yeah.
And they killed. You're right. I mean, I had a nice super move with the Tesla stock, but I also got a super move on the downward this year with the COVID crash, and then I got back in at the right time. So I got very lucky this past year. Mm-hmm. I always thought in the back of my head, man, if you could just time one big down move in the market, you'll be golden. Like just once, just time the down. No one times the down moves and the up moves. But I'm always a bull on the market in general. It goes up what 6% a year now, 8% a year on average over the long term. So you always have to be sort of bullish on the market in general, I think. But it does take these magnanimous drops sometimes, and if you could just get one of those right, it could be all the difference. But you can't try to do it all the time, or you'll just lose out, right? So you have to just
Exactly.
get it right. And so I got it right this year, and it was great.
Yeah. And the thing is like there aren't that many super moves, that are predictable in some ways, that have like there are super moves in different stocks, especially this year with COVID and everything's just shot up. But yeah, it's fascinating. I wanted to ask you about, so you sent me some screenshots of your account over the weekend, and one of the things that stuck out is like what most people won't realize just with our last interview is that most of your holdings are in Tesla stock, right? And also deep in the money leaps. And so what we have right now is from your account, I looked, you have like about 40,000 Tesla shares, right? So this is just common stock. And at today's close of 550 or so, it's about $22 million worth of Tesla shares. And then you've got 765 deep in the money option or leaps, long dated, right? Option calls. And these range from, actually, I'll just list them in case some people actually know what these are. It's June 2020 270 calls, June 21 160 strike. Oh, sorry, 270 strike. Then June 21 160 strike, January 22 170 strike, June 21 160 strike, and January 22 170 strike. So the average of all of this stuff is about a 200 strike deep in the money call that's about a year out. That's like the average you have, So I looked up this stuff, and most of your calls are worth about $400 each. And so for 675 contracts, that controls 67,500 shares, which basically makes your deep in the money leap position worth about 25 million. So if you combine 22 plus 25, you have about 47 million in shares, or pretty much like share equivalent, right?
Yes.
And then your other stuff is, you don't have a ton of, you have some other positions in your LLC, but it's more minor. And then you've got now this, $2.7 million bet short term that you're writing. But what most people don't realize
just to be clear, most of that $2.7 million is not in the fund. It's mostly my personal account. I have a small in the fund. It's a little more diversified, as you said. I have like a big Square position, but it's also Tesla is like 65% of that portfolio, but not 95%. Yeah.
So what's happening is you've got right now 47 million in longer term, right, Tesla holdings, because you're long term, and in some ways you're more of a long term investor in that sense, than this short term trader. But
I'm not a short term gambler. Right.
But you've used that in a way to increase your exposure to Tesla. How did you get those 40,000 shares? Like, were you holding them the whole time, or did you like exercise, options, or what happened?
Yeah, good question. So I think if you remember in 2000, people watched the earlier interview from 2013, I think, or 2014. From that run up, I got a lot of great options that turned into be deep in the money options, and I exercised, or I took assignment of most of those call options that were deep in the money, and I sold a little bit of it, but I took assignment. So I hold a lot of my shares. I think, a lot of the shares are long term held, but then also when the market crashed in February, March, early April, I sold a bunch of Tesla on the way down. I kept, I think I kept like 10,000 shares, or equivalent of 2,000 shares now, long term, maybe more, since 2013. But the rest I like sold and I had some cash on the sidelines waiting for the market to kind of stabilize. And once I thought it did, I bought a whole bunch of shares back too, around, at that time it was $420 before the split. So what's that? $84, I think. So, I bought a whole bunch of new shares before the market came really back up. And then I also bought those, I think they were the 1350 calls. The stock was only like $500, but I bought a whole bunch of 1350 strike call options at that time, the June 2022, I think, because that was the furthest out expiry you could go. and that's the two like 75 or something call options you listed there, strike. And so most of my shares I bought pre-split, obviously, and they've split to be 40,000 long-term shares now. Yeah, and I plan on just holding those long term, and even the deep in the money calls. I'll let those expire and be assigned a lot of those shares and just hold them. I know some people are asking like, oh, what do you mentioned something about selling deep out of the money covered calls, and yeah, I mean that's something you can do to generate income, right? So I'm thinking of holding the long term shares and just selling way deep out of the money calls after I feel like the dust settles from this S&P inclusion event.
Mm-hmm. Got it. Will you try to like eventually think exercise most of your deep in the money calls, or will you sell some to raise cash
Yeah,
and exercise some?
it'll be a combination. I don't like to have margin balances.
Mm-hmm.
I used to have that a lot, and it was extra nerve wracking going to bed at night when you have those margin balances and you're worried about, the next flash crash or whatever, and you could get called and stuff. So yeah, I'm gonna do a combination so that I can hold as many shares as possible, pay taxes on the gains that I had to sell to hold the shares fully paid for. Yeah.
Mm-hmm. Got it. Yeah, I remember I took on some margin to exercise some leaps back like this was in 2014, 15. Leaps I'd bought like early in 2013. And it wasn't like a big percentage of my overall portfolio per se, the margin, but it was just like this mental drain. Just like
Yeah.
because I'm always keenly aware of risk, and I'm keenly aware that nothing is guaranteed either. And like lots can happen, like things can go to zero, it's happened
Yeah.
before. And I'm keenly aware that debt usually isn't, wiped out very easily. Um,
Yeah.
and so, yeah, those are a stressful couple of years. I'm glad I paid it off as quick as possible. And I'm glad I went through it just because it was something that I don't think it was high risk because it was a small percent of my
Hmm.
overall portfolio, but it allowed me to gain a lot more shares because I didn't need to pay taxes,
Mm.
and yeah. So, but yeah, I
How
mean,
long did it take you to pay off that margin debt? Was it like
man,
a 1 year process or
no, it
multi-year?
took me like probably about 2 years or two and a half. Like I remember after I paid that off, I
You
was
felt
just
good?
like, oh my gosh, it was like it was the happiest day because I'm like,
Yeah.
we're done, I'm like,
Yeah.
no more margin, like, and yeah, I mean, it was one of those moves where it's like I actually by doing the whole margin thing, I ended up with probably a good like 25 to 30% more shares than I would have, if I didn't exercise just because of all
Yeah.
the benefits. And it was worth it, but man, the psychological weight of it.
Yeah.
Yeah, yeah.
Yeah, psychological weight
I
of
hear.
success. It's like you do so well, you have to get all these shares and margin, and then you have to
Yeah,
figure out what to do with the margin, right? Or the
yeah,
taxes now. What do you do with the taxes?
yeah,
So
exactly.
it's just, one other thing I wanted to mention is that I think about a lot is I think what's worked with Tesla, like we've seen, is like these long-term leaps, and you see so many people doing that now. And I feel that the market, while history repeats itself, I don't think the market's reaction repeats itself to things. And to me, that means kind of like, okay, the leaps worked for a while, but they may not work anymore. Like
Yeah.
you can't just just because it worked the last 5 years or part of the last, for 5 years it didn't work actually from 2014 to 2019, but just because it worked in 2012, 2014, and 2019 to 2021 does not mean it's going to work ever again potentially.
Yeah. I mean, exactly.
So
Like,
so I think that's a very real possibility. Yeah, I have all these
yeah,
people messaging me and saying like, I do the leaps now. I love it. I love it. And
exactly.
it's great if you've already had success. But the people just jumping into that now, be very wary. I mean, this stuff doesn't, these
Yeah.
opportunities don't keep going. They're not
Yeah.
like the market adjusts,
Mhm.
like
Yeah.
somehow magically these things don't, like you have to adjust to the market. The market doesn't adjust to your strategy,
Yeah. I mean, it's like,
or vice versa. Sorry.
yeah, a lot of times like the super move happens because it was like being brewed for many, many years, Like for
Yeah.
example, there was, I think a big suppression or, with Tesla, with media and shorts and all this stuff, but also some mishaps on Tesla's ramping of Model 3 production. But there's so many things that contributed to this 5 year, lag
Hmm.
and suppression. And there were so many different catalysts at one time, with becoming profitable, with Model 3, Model Y ramp, with Shanghai and expansion, now with S&P 500, all just like in 1 year, just
Yeah.
all came, and you just saw the top blow off. And not just that, it's COVID too. It's like
Yeah.
COVID revalued everything and reshaped everything.
Yeah.
And to have all of those things come together again, um, within the next few years, it's like
Yeah.
the chances are very, very low. Like
There's not much more that can happen all at the same time. Yeah.
exactly, like for folks who are doing these like bold like leaps way
Yeah.
out there. It's like
Yeah.
yeah, man, it's
Even like
uh,
the 800, like people who are buying like 700 leaps, like I still think that's risky too, because like this S&P inclusion, yeah, the stock could run up to like a
mhm,
thousand, but then who knows, maybe the whole market's kind of like in a lull for 4 years or 3 years, and
exactly.
it kind of like dwindles, and the stock kind of fluctuates between $600 and $800, and your leaps you just paid a fortune for now turn to be worthless over 2 years, so
Yeah.
yeah, I think buying the stock is the safest, the right thing. That's what I tell people to do that are, not sure what to do. Like if you can't come to your own conclusion of what to do by yourself, like you really need to just not do something risky.
Yeah, yeah, exactly. I wrote a blog post on like, or a post on my mega thread at TMC, like back in 2014 or 15 or so. And I was talking about, how to use leaps as a way to, expand your exposure to Tesla. And the whole theory was, you hold stock when the stock price is pretty much like medium, high, and high. Medium to high, you hold stock. But if the stock price is basically medium to low or really low, then you start converting to leaps, more.
Yeah,
And then over time, if the stock price rises, then you do the reverse. If it's
yeah,
kind of high, you revert back and you just buy all kind of shares. And when I think about that, it makes sense but there's a few things that need to happen. First, you need to accurately kind of assess whether a stock price is high or low. That's
yeah,
hard for most people. But then another thing that throws it off is the lows could be actually super prolonged. Just like
yeah,
how it was with Tesla, and you can actually run out of hope or run out of like perseverance and just end up closing everything because you're just almost like wiped out right
yeah,
before the spike up. And so
yeah,
it's like whoever, like, yeah, it's just, I don't know, it's there's reason for the reward too, because there are definitely risks involved, I think.
yeah, yeah. It's funny because I was doing something like that for, leading up to 2020. And at the end of 2019, this is an example of a bad trade I did that I kicked myself. Well, I mean, I can't kick myself now, but for a while I was kicking myself in January of this year because I had a whole bunch of Tesla 450 strike call options, or 400, I think 400 call options or something, right? And I had like, I don't know, hundreds of them and they were almost worthless by the end of 2019 because the Tesla had been like, hadn't gone above like 300. I think it was in the fall, October, November. And I was getting nervous because I had some gains from earlier in the year I'd recognized, and I wanted to be tax efficient and create some losses because I bought all those for X amount of money and I was like down, 100 grand or whatever. And I wanted to just cancel out my gains with it. So I was like, I should sell these now because I've seen options get so worthless where you can't even sell it. There's no bidder. It's like 0 by 1 cent as an offer, 2 cents as an offer, but no bid, and you can't sell it to anyone. So you're just stuck with it until January, the next tax year, and I would be able to cross. So I was like, I should just sell these now for like 5 or 10 cents and or 20, whatever they were, a dollar or something before I forget about it. And so I sold all of them. And then, sure enough, it's like right before, Tesla. It was right after the Cybertruck unveil or something, I think, and the Tesla tanked, or maybe it was a month or two before. But I think it was after. And then the stock starts roaring back, and it turns out I would have made like a ton if I just held on to those through the end of January instead of like trying to be tax efficient. So sometimes trying to be tax efficient can screw you up too. And I've made some bad trades trying to be overly tax efficient too.
Hmm. Yeah, yeah, definitely. Um, yeah, definitely some interesting stuff.
Yeah.
I want to ask about risk. Do you think like overall you'll still take a lot of risk, or do you think that will change a little bit because like will
Yeah.
preservation come into the picture a bit,
Yeah.
or will you
Yeah.
kind of still kind of hold your kind of pushing
I think I'm
forward?
I think I'm still I think I have a pretty good formula where I keep a certain percentage in safe long-term Tesla and a certain percentage in cash or diversified other things like real estate or whatever. But then I think a good chunk of my portfolio, it's worked for me. I'm going to put it into my fund and just try to grow the fund and do the charitable intent thing. And if it's very successful, that'd be great. So that's kind of where I'm going to try to use my skill set to see if it can, serve a greater good of some sort, not just, making money for myself, which is great, but, also try to do some other stuff with that profit as well, obviously for myself, but also spur the charitable kind of business model with the fund.
Hmm. Yeah, I noticed like at a certain point, it's like um, the motivation to like to have massive gains. It's like it kind of needs to change or morph in some ways,
Hmm.
because it's like after a certain net worth, it's like past that, it's like what's the point for yourself in a
Yeah,
in a
yeah,
sense, like it's like I don't know. I guess people have different tastes as well,
yeah.
Maybe some people
I
want the
keep thinking to that quote. I think Elon Musk said in one of the interviews recently with Third Row or something, where he said, "Money is just an information system for the allocation of labor." And that just got me thinking differently about things, because it was right around the time I was doing really well and I was struggling with what do I want to do? My net worth has gone up. Like, this isn't as interesting
Mhm.
to me. And I just realized, that makes sense. Like, if I have enough, I can allocate labor to good charities, or, I could give to for good causes, because I think our tax dollars are very inefficiently used, but instead it's like taxing myself, but in a way that's much more efficiently used to the greater good of society in ways I think that's important.
Yeah, yeah, like early on, like this was like probably like maybe before I invested in Tesla, I had this realization of like the way people perceive money or understand money is like very distorted and flawed. There's a lot of baggage with it. And I came up with this concept of like unit. And I said,
Mm,
okay, let's redefine money completely and then say, okay, what if one unit is what an what an average worker, let's say, can make their entire life, um, and of savings and retirement. And I mean,
mm,
there could be different, values of that. Maybe it's 500,000, maybe it's a million. So let's say hypothetically it's $1 million,
yeah.
Um, and if we call that one unit, it's basically, and let's say that one unit can hypothetically kind of feed and support, let's say, a family for 20 years or 30 years. Um,
Mm,
and so the question is like, how many units do you need kind of for yourself, but also how many units kind of, and this is kind of a little bit philosophical in a way, but I do think that certain people might have greater responsibility toward, let's say making more units and then using
mm,
those units for good purposes, right? So I had this
mm,
early on kind of epiphany where I'm like, okay, in terms of number of units, how many units let's say do I need for myself or my family, and then how many units do you think, I could create for and use for good for others? Is it 5 units or 10 units? Is it 50
yeah.
units or 100 units? And actually, I got this realization. I'm like, I think actually, due to certain kind of skill sets and also the way I look at things, that I was supposed to raise quite a few units.
Hmm.
And that's kind of helped me to invest in Tesla and to seek out opportunities. Is that realization that yeah, it really is. It's like money and dollars in a sense doesn't mean much. It's the units, and the units can be transferred into either labor, like you hire people or something, or into goods like materials, right?
Hmm.
And some goods are actually a combination of labor and raw materials together. But yeah, with that, I started to think like at a certain point, you have too many units for yourself in a way. And then
Yeah.
it shifts to how many units will you kind of create for a certain a greater good, a greater purpose. And I
Hmm.
think I'm curious just like how you will handle that transition as well, to kind of creating
Yeah.
units for others.
I think you thought of a great framework to think of it as. Yeah. I mean, you get so much at a certain point, you have to think about something more than yourself to spend it on, right? And early on in people's lives. You're just trying to survive and become self-sufficient, right? And just pay for your rent and all this stuff. And at some point, you have to kind of change your mindset and try to serve some greater good. The question is, what is the greater good, right? Like one person's greater good might be another's evil, right? So it can get tricky quick. So that's another philosophical question, that is to tackle. But yeah, I like the way you were thinking about it. Yeah, and another example of separating it to units, just like I like to play poker, for example. You're familiar with poker and
Hmm.
Texas Hold'em, and I think a lot of
Yeah,
people are
yeah.
probably now. It's become popular. So I used to go to the casino, 5, 10 years ago playing, and I'd think, oh, I'm losing nuts. I can't bet that. That's too much money. I can't bet this or that. And then when I changed my mindset to say, okay, I'm bringing, $300 to the table. I expect to lose it. This is not money. This is just chips on a game. And I convinced myself to think of it that way, but a serious game I wanted to win, because I'm competitive. Then once I thought of it that way, I was able to like do much better, not lose, and I won a lot of times, and I came up with like unorthodox, strategy. Like there's so many assumptions in life and how games are played and the investments are made. Investing is just like a big game. I love it because it's like a huge game. In a way, like you're just trying to find the companies that are going to do the best, and it's sort of like capitalism and Darwinism combined. And so with poker, I just was like, what are the assumptions that people just do? And like, for example, everyone mucks their hand. Like all good poker players just muck their hand when they lose, even if they're caught bluffing. They don't want to show anyone, right? No, I don't want anyone to have that information. I just started doing the opposite and said, I'm going to show every hand I do, even when I bluff and I fail. I'm going to just show everyone everything on the table. And I'm the only one at the table that does that. It does great. Like I'll play, and if I get the right set of combination of hands, people know I bluff, for example, and then I get a really good hand. Everyone sticks in. I can maximize the pot I get, and I end up getting like 10x the money I start with, like half the time I play. It's like because I get the right order of like, all right, I bluffed a few times, I failed, but everyone knows, and then I got the great big hand, and everyone thinks I'm bluffing still, or vice versa. It's just if you get it's just like an unorthodox strategy that people just don't even think of because they just go off what's assumed everyone else is doing.
Hmm.
But
Yeah.
that applies to investing and in life in general. Just there's so many assumptions we operate on that if people can wake up to kind of, see what's an assumption versus what's a choice, they can kind of try things out differently.
Yeah, definitely. Um, I wanted to actually to talk to you about this concept of like herd mentality, and I saw your tweet, kind
Hmm.
of, which is interesting. Like you give your framework kind of for finding opportunity and questioning kind of the assumptions of the crowd and seeing if your own kind of conclusions are vastly different, and then trying to take action off of that. But um, I've been actually talking about this stuff with my wife for the past few days, kind of your tweet, but also kind of some of my own kind of philosophies in this stuff. But what I want to do is perhaps save that for another episode, because I
Sure.
think actually I love talking about kind of a different take on stuff. I think like typically like investing has been taken over by kind of this, I don't know what it is. It's been taken over by tradition and by institutions and by just a culture of investing that, like, if I was to go into investing and then if I was a newbie to investing and then I just pick up, investing books or the typical YouTube channel or whatever, I think I would be really discouraged because it's just like, it just seems so like boxed in. It seems
Hmm.
so predictable, slash, you just need to follow what everyone's doing, and have your so-called 20 diversified stocks, or do an index fund, or do something. And
Yeah.
and like the vision of investing is just so, in a way, uh not just tamed down, but it just doesn't feel like the investing that I personally know, like that I've kind of developed on my own kind of philosophies.
Hmm.
I feel like in a lot of ways, like the essence of investing, like there's this concept of finding the pearl of great price, kind of risking it all. Like there's a
Yeah.
lot of like different concepts that modern day investing just has rejected in a sense, you know. But
Hmm.
I think there's something about investing that if you kind of remove yourself from all of the traditional kind of investing influences and the history of investors, whatever, and remove all the titles and pedigrees and experience everyone has, and if you can kind of be open to a new form of investing, a new look, a new value, there's actually so much potential, you know. Yeah, I don't know what your thoughts are.
Yeah, absolutely. I agree. I think it feels, I feel like you and I are both on the same level in that we both feel a little alien to traditional investing dogma, or maybe it's not dogma, but that's what we kind of think of it as probably. But, diversification, 60/40 equities, bonds, like who's doing that now, right? I mean, is that working for people? I don't know. It's just, it just, I feel like there's all these books written, there's classic, training portfolio analysis, it's just a lot of old money using tradition to kind of overrule new ideas, I think, and that it just seems like there's time for a new age of investing, and it doesn't have to be risky either. But anything outside of the box of what the tradition is automatically labeled as risky, right? Too risky. Oh, no, don't do that. That's too risky. Like you got to be diversified. This is what you got to do. So I think it's important to kind of test the boundaries and try to wake up from all those assumptions. Doesn't mean you should, it's a fine line between doing something really crazy, like putting your life savings down on some like call option that's going to expire worthless. Like the option I have right now, this trade I put on could very well expire worthless. Send the money, the price is going up, it's off to a good start, but it's probably still greater than 50% chance in my mind that it's going to expire worthless. It's not, maybe it's 30% now, but it's still it's not better than 50%. So people, I think, can get ahead of themselves and try to like get too risky or gambling, like, and they have to be careful. But I think the normal models need to be challenged, like you said.
Hmm. Yeah, definitely. I mean, on the flip side, I feel like there's a lot of herd mentality in not just the preservation side, let's say just purely index or, bonds or, all of that. But there's also a lot of herd mentality in the betting side of things, kind of the short term side of things,
Hmm.
where it's like people will just flock to anything that, anyone says has potential and they don't even like look into things, like,
Yeah.
yeah.
Yeah, I look into that. Like I use that as an internal like measuring stick almost. Like if I start noticing people on CNBC or Bloomberg or all over Twitter saying Tesla's a great bet at this price, buy it, then I'm like, oh crap, I should probably think about getting out soon because everyone's getting. Or like when we're running up to the election, everyone's like, the market's gonna crash with the election. Who knows what's gonna happen? Buy puts, get ready. I felt like that was a crowded trade, and the market did kind of go sideways or down a little bit for a couple months before the election. But what happens right after? Well, everyone has to unwind their, you know, cash on the sidelines and put it back into equities, or it just the market goes back up. It wasn't a big event, so a lot of times it's just trying to identify what the herd is and then steering clear of it. And sometimes the herd can be right,
Yeah,
too. It's
definitely.
not always wrong, but you
Mhm.
just have to kind of think about it for yourself.
Yeah, exactly. Yeah, a lot of things, a lot of interesting stuff to think about.
Yeah.
All right, Emmett, I want to let you go here, but thank you for chatting again. And yeah, I
Yeah.
appreciate I love chatting about stuff like this.
Yeah.
I feel like not enough people talk about kind of like investing on a kind of two levels down, kind of like
Yeah.
it's
Philosophical and
yeah, I feel like too
psychological. Those
much
are
of
like
it
two
is
things
just
that aren't
like,
talked about.
yeah,
Yeah.
I feel like it's just all on the shallow level. And
It's all quantitative and
exact
spreadsheet based, and I think
yeah,
that's a weakness these days. I think too many people do that. I think that time will come again eventually. Like things go in cycles, right? And
yeah,
maybe there will be a time and place for that one day again. But
yeah,
right now, it just doesn't seem to be working so well for
yeah.
people.
All right, man. Take
All
care,
right.
and we'll chat again. And yeah,
Okay.
I'll add Emmett's Twitter account on the video description. I'll add his website and
Great.
the past interviews I've done with Emmett. And if you have any other questions for Emmett, yeah, add them in the comment section. I'll try to have Emmett on again to update the trade, but also maybe talk about some other aspects and angles on investing.
Yeah.
All right.
And this is just our experience, just so we're reminding everyone, it's just our experience. If they missed the beginning, this is not, none of this is investment advice, right? It's just our own experience we're talking about with each other. And we just have to make sure people that's clear. Some people are asking us constantly for what trade should I do? Which trade should I do? And we can't tell people what to do. It's just our own experience we're talking about.
Yeah. I mean, people actually have pretty much stopped asking me about because I keep on telling people like, I'm not telling you like, think for yourself. Like, yeah, I have a disclaimer on every one of my video descriptions about, hey, this is, not financial advice, make your own decisions. That's
Good.
very clear, but
Yeah, that's smart.
All right, man.
Okay.
Okay.
Cool.
Thanks. We'll
Talk to
talk
you
later.
Dave.
All right. Bye.
Bye.